2.5 years ago, we had the first crypto product, Bitcoin, based on Bitcoin ETN. It was mainly for regulatory reasons, this complex. We have now also with our partners FTSE DAN index-based Bitcoin derivatives. We're looking for other derivatives as well on other coins. It's a slow process, because it's not just the German regulators, the European regulators need to agree on our listing. Now we focus on this index-based products, and we traded 90,000 contracts in the first year, though room to grow. And we've seen interest from retail, from hedge funds, from market makers, from some of the ETN providers.
How is the conference going for you?
The conference is very interesting. It's fascinating, the growth stories of the US option industry, how things work. So I learned a lot, also about things which don't work so optimal. Despite all this liquidity, which is massive, that a lot of flow, a lot of more flows than I thought it would be, is also arranged outside order books and so on. So that's an interesting thing.
What is happening with the interest in volatility trading at Eurex?
The VStocks always has been sort of the little brother of the VIX, if you want, and has been very good growing till the Corona situation. And then when the markets corrected, volatility picked up, some people got burned, and this had a dampening effect on overall liquidity and client usage of the product. But in the last 18 months, we have really invested into the product to grow it where it was and beyond. So we have more extensive liquidity provider schemes thanks to our partners there. We have done a lot of client interaction education. We are in the process of changing our final settlement price determination window to make it less vulnerable to potential disruptions. And it looks like we're sort of getting rewarded. In April, futures volume was for the first time above or at the level of pre-Corona. So we had 80,000 average daily volume in April. And also the option grew quite a bit to 30,000. So we're on a good path.
How does the launch of total return futures and 3 MSCI indexes align with Eurex's strategy?
A core pillar of the Eurex strategy is trying to futurize products where the clients want it. And we had dividends, we have the total return futures, we have FX, so we have various areas where we have that as a strategy. A total return future is effectively an otherwise OTC traded total return swap, moved into the regulated and cleared exchange environment in a format which is liked and supported by the market and familiar to the market. Eurex has sort of been the global inventor to this in 2016, and the Eurostoxx 50, the first TIF then, since then other exchanges followed. In 2021, we also created a marketplace for the total return futures on the FTSE 100, which is unusual because the FTSE 100 price index, the standard index, is obviously not at Eurex, so that we have managed this. And now the MSCI is the next step, launched in March. The products are used for equity financing purpose, for beta replacement, dividend neutral to beta replacement, or hedging repo risk. And it's quite success with 131 euro open interest notional by the end of 23.
What are you seeing in terms of new demand coming from the retail sector?
Traditionally, Eurex has not really invested in retail relationships. That has been driven by sort of two things. One, retail tends to be very local engaged, or tended to be very local engaged. And in Central Europe, outside the Netherlands, there's very little demand for leverage products, and the demand which is there sort of steered into warrants, structured products, and so on. So the demand traditionally for exchange-traded derivatives is very small, so that's why we didn't have that. We changed gear, so now since 3 years we have a global retail strategy. The reason that we changed this is, on the one hand, retail is getting more professional, more sophisticated. Here at the conference, a big theme in investing into education, into retailers. And then retailers, for example, in the US or in Asia, they look for global expansion in a way, global distribution. And then they should obviously think Eurex as sort of the marketplace for equity derivatives, also interest rate derivatives in Europe, where the most volume is, where the most active volume is. So that's one reason why we changed the strategy. And the second reason is that also in Europe, we have an increasing amount of more sort of professional retail investors who may come from warrants, but now they want to sell premium and things like that. And then they need our product. So in both segments, we see growth. And so we have launched this strategy based on 4 pillars. Number one is like here on the conference, education. It's also here the topic. We need to educate the retailers. We have global partnership agreements with brokers to do this. Number 2, reduce the entry barriers. We have reduced the data fees, for example, which were charged to retail brokers or their end clients. And 3 is then obviously retail products like micro futures. And 4 is also some brand awareness. We don't have in Europe Tesla and Facebook and so on, but we have Porsche, we have Daimler, we have BMW, we have Adidas. We have also global brand names which are of global interest and where we have the options on. So that's the pillars, and we are not becoming or competing on retail flow with the US equity option exchanges clearly, but we have, in Kospi, we have 50% retail. We have the daily options, which we launched last year, is now 90% order book and with a large retail chunk. So crypto, we have retail interest. So it's a number of products where we have some retail interest, yes.
How is Eurex doing with its OTC FX to FX futures trading migration?
FX had been largely excluded from many of the regulatory requirements, like UMR and so on. But things have changed. And now the cost related to holding OTC FX position have grown exponentially, mainly to SACA regulation and UMR regulation requirements. And this is now moving the industry. So banks invest into automation of orders. Banks, we have doubled the number of clearing members in our FX segment in the last year from 11 to 22. We have the privilege that one of our sister companies of Eurex is 360T, which is a pretty successful FX marketplace for corporates. And they offer, for example, also the arrangement of futures bilaterally, which then ultimately end up at Eurex Clearing and at Eurex, in order to address the needs of the clients who are familiar with the processes at 360T and want to use this in order to create things. So things going well. I mean, it took us a number of years to build the FX market. I mean, of course, FX CMEs they are already big. So, but we are now at the level, we traded in the first quarter or till April, end of April, 750,000 contracts, and with 40% growth. So we are at the level now where liquidity creates more liquidity. Building a market at the scratch is always difficult, but at some point you get this momentum and this regulation helps, and it is becoming another futurization story.